Hi everyone, welcome back to Corporate Decoder, the place where we translate complex corporate filings into plain English. And today we're diving into Hartford Insurance Group's latest 8K report, which sounds like it's all about a generous donation. So Hartford Insurance Group, a major player in the insurance world, filed this report on August 1st of 2025. This filing is actually an 8K, which is typically used to announce major events that shareholders should know about. Now, the big news here, and it's pretty straightforward, is a donation. They gave away a significant chunk of their stock. The company, through one of its subsidiaries, Hartford Accident and Indemnity Company, donated 300,000 shares of its common stock. This is their actual stock, the kind you can buy and sell on the stock market. They gave it to an organization called HFPG Inc., which is connected to the Hartford Foundation for Public Giving. This donation was made to further the company's philanthropic goals. Essentially, they're giving back to the community. The company has also registered these shares with the Securities and Exchange Commission, the SEC, so that HFPG Inc. can potentially sell them later. It's a way to make sure the donation is on the up and up, and that the recipient has the ability to manage the gifted stock. Now, while this report is primarily about a donation, it does list some of the company's registered securities. They have common stock, which is what most people think of when they think of owning a piece of a company. This stock trades under the ticker symbol HARG on the New York Stock Exchange. They also have these things called notes, which are essentially loans the company has taken out. These particular notes are for a big amount, a 6.1% interest rate, and they're due way out in 2041. This means they borrowed a lot of money that they have to pay back over a long period. These also trade on the New York Stock Exchange under the ticker HIG41. Then there's something called preferred stock. Think of it like a special type of stock. This one pays a fixed dividend of 6%, and the non-cumulative part means that if they miss a dividend payment 1 year, they don't owe you that missed payment later. These are represented by depository shares, and they trade under Hatch PRG, also on the New York Stock Exchange. It's important to note the company is not considered an emerging growth company. This means they likely have a longer history and are subject to more stringent reporting requirements than newer, smaller companies. The filing then gets into the exhibits, which are supporting documents. You've got legal opinions from a law firm called Cleary, Gottlieb, Steen and Hamilton LLP. They're essentially giving their legal take on the stock donation. This opinion confirms that the donation and the registration of the shares are legally sound. You also see their consent to be named in the filing. And then there's the usual technical stuff like the interactive data files and something called inline XBRL. Think of this as a digital format that makes it easier for computers to read and understand filing. Finally, the cover page itself is also provided in this special format. Duck now, let's talk about my take on this. On the surface, this report is all about a donation. It's a very clear and positive signal that Hartford Insurance Group is committed to its corporate social responsibility. Giving away 300,000 shares is not a small gesture. It highlights a company that is performing well enough to be generous. However, an 8K is usually for material events, and while a large donation is noteworthy, the real story about Hartford's financial health would be in their quarterly 10Q or annual 10K reports. What this filing does tell us is that the company has established a mechanism through its subsidiary to facilitate these types of donations and has likely been structured to allow for this kind of giving. The mention of selling the stock also suggests that the recipient foundation might need cash for its operations and will likely try to sell these shares at some point, which could have a slight impact on the stock price if it's a large volume over a short period. But generally, the market is usually prepared for these kinds of institutional sales. The key takeaway is that Hartford Insurance Group is in a financial position that allows for significant philanthropic contributions. This is a sign of stability and success. While we don't see specific financial numbers like revenue or profit in this particular filing, the ability to donate a substantial amount of stock implies strong underlying performance and healthy cash flow or equity. The fact that they have different types of securities like common stock, notes and preferred stock also shows a well-established capital structure, which is typical for a large, mature insurance company. The risks here are minimal in the context of this specific filing. The main risk, if you could call it that, is that the recipient organization might sell the stock, potentially creating a slight downward pressure on the share price. But this is a normal part of the market and is usually anticipated by investors. In conclusion, this 8K filing from Hartford Insurance Group paints a picture of a financially sound company that is actively engaged in corporate philanthropy. It's a positive sign for investors and the community alike. Alright, that's our breakdown of Hartford Insurance Group's donation filing. What's your take on companies making such generous contributions? Do you think it impacts your view of them as an investment? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives into the world of corporate finance. Don't forget to check out the Discord community linked in the description below for more discussions. Thanks for watching. See you next time.